Good morning, everyone. Welcome to Admiral Markets Trading Room. We're going to take a look at the Forex market and maybe some other financial products as well, like we did yesterday. Who knows? Today is the 14th of November, and we're going to take a look in just a second. But first, of course, the risk disclaimer explaining that trading foreign exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. Thank you for your attention on that. Today our main focus is going to be on moving averages. Yesterday main focus was on price action, and using those moving averages will be defining the trend, looking for opportunities, maybe even using them as filters, but other things as well, of course. And then if something is interesting, establishing triggers and entry methods. Alrighty. With that said, we're going to welcome Michal. Good morning.
Everybody, good morning to all the traders out there. Good morning to every one of you. I will now switch the presentation to my screen. Here's my lovely mug. My name is Michael Omachov, and I'm a client relationship manager for Admiral Markets. Thank you for a lovely introduction, Chris. Today we will have another story, another fun fact about Forex and investments. It's what we call Rule 72. In some other times, this rule used to be called Rule 71, the Rule of 70, or even sometimes a Rule of 69. And this is a very interesting rule. If you want to know how much time it will take to double your investment, all you have to do is divide 72 by your expected rate of return. Here's a good example. If you want to see how much it will take you to double your investment with a 6% growth, divide 72 by 6, and we get 12 years. The first time the rule of 72 was mentioned by the mathematician Luca Pacioli in the period from 1445 to 1514. However, in none of his books he made any effort to explain how the rule was originated. So even though it was first mentioned in the 16th century, I think, and all the scientists think, that this rule was a lot longer than Mr. Luca Pacioli. If you would like to contribute another fun fact about Forex or investment, you can always send me a fun fact to mo@admiralmarkets.com. Thank you very much for your attention. I will now pass the floor back to Chris.
Thank you, Michal. Interesting 72. Let's see. So in that case, with 72 in mind, we take maybe an example of, I don't know, let's say 10%. So that would be 72 divided by 10. That would be 7 years. Interesting. How about if we take 72 divided by 100? That's a lot faster. Not sure if that's realistic, though. Let's take a look at the Forex market now and start with the euro-dollar as usual. The euro-dollar. Well, first of all, we had a pretty big spike down and then a spike up. And personally, I was a bit impatient maybe, and I sold, in fact, upon the break of this trend line, although I knew that this trend line would be in play maybe as well. So I pulled the trigger a bit too early, in all honesty, but that sometimes happens. You know, this was a bit of a wick, so I still found it defensible and explainable that at that time to put the trend line like this. But yeah, that's part of trading, I guess. You know, you make decisions sometimes that are not always optimal. So that happened in the afternoon. That didn't work out too well, as you can see, because it closed and reversed. What I also liked about it was the speed at which it moved down. It was a pretty good thrust, I thought. But you never know, in the choppy environment like this, it bounced off the 618 after bouncing off the 50 and went right to the 272, minus 272. Well, anyhow, that's that. Obviously, we still have a lot of this short-term upside momentum. And the question is finally this thrust going to kick in now? And we'll get some continuation to the downside. That's the question. I was thinking that yesterday could be the moment. I knew that this was too early, and this too. This I thought could be, the moment that we break to the downside. If it doesn't happen now, then we'll be slowly but surely in an uptrend, in fact, right? And this downside really not having the effect. If you put a fib on this downside, we went to, nicely to the 618 and nicely to the 786. So the question is, was that the turn yesterday? If you caught the 786, great job. We did talk about it, a spike up and finding resistance there. It is moving down relatively okay. I don't know if this is you can consider a slow or fast movement. It's difficult to say. It's not a close in reverse. It's not a bull flag either. So it's kind of in a gray area. I think it could really be both at the moment. So I'll have to see. I think just the best to keep an eye on the moving averages and these trend lines probably, and wait for a break of either of the two. You can see that the breaks of moving averages, you have to be careful of them because sometimes you just get a small break, and that's the advantage sometimes of trend line. So it's good to have both on the chart in some cases. You can see these breaks of the moving averages really didn't get any that much follow through, right? This time it could be different though, but still it's a good trend line. So in this case I would stick to the trend line personally. That's the 1 hour chart, but let's take a look at some higher charts as well, maybe, or lower. Let's take a look. 15. Well, doesn't really provide us much information. It's the band is flat. So on a 15-minute world, this downside is actually a correction at the moment. For our world, well, we had some divergence here. That's maybe one of the reasons why we're seeing such a prolonged upside between these bottoms. And the target, if you have divergence like that, is usually the long-term band, the green band here. So who knows, maybe we'll, as I said, this could easily become support to move up to that green band. It is possible. And maybe finally here we can see more resistance. So I have to see. The move up here was pretty aggressive as well. Went up to the black band here and now broke above the black band. So and this black band is now already pointing up. So if you use that as an indication of strength, basically the currency is turning a bit here, which easily therefore could become support. So I don't know. I would be careful about buying here necessarily, but maybe if it goes a bit lower, it could be a bouncing area. If it does break, of course, it's a good short as we've been talking about. So I guess something like this is the best roadmap at the moment. The best attack plan, let me say it this way, I think. Let me take a look at the daily chart. Yeah, we were talking about these two bullish candles, I think, yesterday. The euro posted two bullish candles, and after a trace, we saw that upside again. Could be the same scenario today. 133.92 is yesterday's low, so that would be a pivotal point. If we do break 133.92, then we'll probably see some downside at least to the minus 272, if not even to the minus 618, around 130.140, 131, 132, etc. Alrighty. Well, I guess that's all to say about the euro. Let's take a look at the pound. Alrighty, pound pretty choppy recently. It is moving down, but it's it's awkwardly awkwardly spiky. Well, that's not that typical. I mean, that's pretty typical, in fact, for the pound dollar. And the fact that we broke actually a weekly bottom and then did the opposite is almost like classical for the pound, which loves to break bottoms and tops and do the opposite. And in fact, yesterday's break and then close in reverse to the upside, fitting very well in what you could traditionally expect from the cable. And of course, this was happened during the news event. To be honest, I saw the positive claimant count change. Yes, I'm not sure exactly what the inflation report said. I didn't check it. Maybe someone in here knows. I could share that with the others. But in any case, the effect on price was very positive, and it flew up 200 pips, as we know. But it is quite funny how that cable works. And looking at its currency characteristics, it's quite funny how that did the opposite. So big move up. This whole thing is quite choppy, right? It's just I've seen this often with this currency, with this pound. Before it really changes gears, it makes a lot of spikes up and down. It just takes time before it really switches. You can look at examples in the past if you want quickly. This is maybe not the biggest, best example, but even here, yeah, it's not the best example, but like this here, many spikes up and down before it then finally chooses a path. Let me see. There was this one here. That's the one I wanted to show you. That was a classical one too. So many spikes here too. Before it really made it upside, finally. Anyhow. Let's see. What we have today is, if it breaks this trend line, I do think we could see some upside here. We could go back to maybe the 786 fib. I was saying you never know. I mean, I didn't think the chance was that high, of course, logically, because if you just broke a bottom, you don't think it's going to go back to 786. But I did mention it, I think, that it still has the potential to go up to that 786. Unless, it really has to break this bottom for me to really be confirmed bearish. And, that's proving to be a reality. It is definitely possible that if we break this green line, we could go to that 786. Of course, we have a top right in between. We have to be aware of that. But if it breaks that top, we can go to that 786 at 161.74. So that could be a trade to look for here. Otherwise, we are at a resistance spot. But I think that looking at this momentum, I wouldn't want to short it personally. I'll be a bit leery of that. I don't like shorting against so much momentum. It spooks me out. So I would rather wait for the break, or if we do bounce, then wait for clear sign of bearishness and then take it later and a bit lower for downside. Hope that makes sense. That's at least my vision, because this is a pretty sturdy momentum break, momentum upside, and it could easily be something like this up to that 786 and then see bearishness set in. So 786 is a good selling area, and otherwise below here is a good, even if we get downside and a bear flag. For the moment though, expecting that break. In fact, we could even think about putting a fib on this upside and it could easily bounce off of 382 like this. It's possible. And you can see that the minus 618 target lines up with the 786, just like the minus 272 lines up with the 61.8. Our band is very, to focus on the moving averages, our band is very steep, indicating that there's a fair chance that if we break this 50-minute fractal, we could be moving up, in fact. I'll be a bit, leery still about pound dollar. It's so early in the day, as you know. Let's take a look at the Forex calendar, in fact. I don't think there's anything, but no. Yeah, there is. Retail sales. Okay. Otherwise, as usual, a lot of medium and low impact European news or Eurozone news. So back to the, what was we were looking at the 15. Yeah, we were looking at the 15 for a break here. Let me just take a look at the daily chart. Wow, that's a pretty interesting daily candle. Massive. Daily engulfing twins. That you would think should see some follow through at least, right? Or that's what we should expect when we look at this daily candle. We could see maybe a retrace of the daily candle, but that should inspire some buying to at least a few pips higher. Okay. With that said, however, last thing though, if the 786 gets hit or the 618, personally, I do think that could definitely be a resistance level. You can see we're struggling to the upside here. Unless this is a massive correction for more upside, I would think that this is more of a turn, personally, for more downside. So I wouldn't be surprised to see downside from here kick in down to at least this level, if not maybe further down. So that's what I would be thinking. Maybe like a head and shoulders here. Well, in any case, we would need to break probably below this line for that confirmation. But that's what I'll be expecting, especially if you look at the weekly chart. If you look 1, 2, 3, 4, 5 weeks haven't broken this high, which effectively means that this upside is over, right? This upside is one leg now, and we can put a string fib on it, and we can see that we stopped at 23.6. So once we break the 23.6, we should see a fall to 382, and then probably to the 50 fib, I would say. And this resistance trend line is probably holding the cable, I would say. So that's what I would expect. But still, before that happens, we could have a small upside. Alrighty. Let's take a look at something else. Maybe the Aussie. Righty, 4-hour chart. Odd USD got a bounce off the 92.80 level. and we're getting a rejection bar right at the band, in fact. All right, you can see that pretty bearish sign right in here. That happened a couple of hours ago, and after this retrace, I mean, this could definitely be retraced for more downside. The bounce here definitely seemed likely. Off the 9280, we were struggling to break through that. We broke a few pips, so you can see that we did get the bounce, but it could be a bounce for more downside. We could take a look at that on lower time frames as well. The band is definitely at a good downside angle, so that's looking pretty bearish. This 4-hour chart, bearish momentum, pretty good price action signal as well. So let's see if there are any entries. Maybe it is still 50 pips away from this 9280, so there could be some downside. Give me just 30 seconds, and I just need to. The doorbell went. In fact, 1 second. Okay, never mind. My girlfriend, in fact, is rushing down to open it, so no problem. Let's see. This is the audio. Is the yeah? Yeah. So let's take a look at the 1-hour chart. We went back to the long-term moving averages here on this 1-hour chart, as you can see. Let me take a look at the 15. Difficult to say. We have a trend line here, but that's still far from away. Yeah. If we break 90 to 80 from a daily perspective, this could go, this could fall. This could fall all the way back to this bottom at least, if not break it, in fact. There's definitely bearish momentum setting in, and I think the potential to correct higher to the 99.20 is definitely substantially less than it was when we were somewhere in here. I mean, we still need to break 92.80 for that. Even though that it looks like we'll be breaking, if we break 92.80, then there's a very high chance we'll move down to 88 and then 85. I'm just trying to see if it makes sense. Does it make sense to wait for this or to find a short earlier? That's what I'm trying to judge. Let me put a fib on here. It's pretty deep correction, in fact. Went all the way to 93.86. There's no divergence between these bottoms. So break of this bottom, looking from the 1-hourly perspective, I think is a decent probability, in fact. Yeah, it's a different environment. This was a very bear flag correction. which was easier to trade. As you know, I sold it in here. I was a bit unlucky that I got taken out here, in fact, before it fell. Um, but I think that I'm trying to see if it makes sense. But I think that a short in here could work well. I'm just thinking if it makes sense because stop loss could be all the way here. Difficult. Maybe a hook back still would reduce that risk, and you can use maybe this as a stop loss if we get the next break. Or we actually broke this 50-minute fractal already. The 1 hour is still pointed up though, so this could be potential support still. So that's why I'm a bit leery. We have good price action though, but that price action, we could see a bounce here. So I would still wait probably. See if we can get a hook back and then try to get a better R2R somewhere in there. Nothing goes in one straight line, so this break probably will not continue to fly forever. I mean, if it does, then I would rather wait for a bear flag here and take the next break. Other than that, probably best to let this maybe go down a bit more and then wait for a bigger retrace, I think. If it does move down, we'll probably respect this trend line. We could wait for the break of the trend line as well. That's probably the best. Yeah. I mean, if someone took it somewhere in here, of course, that's great. You can move it easily to put the stop loss above this top right in here, and you're good to go. But here, you know, the band is up. The risk is pretty big compared to a potential bottom in here. Probably better to be more patient. So let's take a look at the dollar yen. Dollar yen is finally pushing up. It took very long, or at least it felt very long to me, but it is breaking. Yesterday during the Asian session, close to just after Tokyo Open, it did break to the upside. This bull flag looking correction, and we're getting a break potentially, I think, even above this resistance. No, not yet. We're pushing above it. It's going pretty slow for my feeling, but let's see if it can finally break this daily triangle. All right, it's been at it for quite a while. This triangle right in here, and it would need to break above 99.80 and probably 100. Then we have a fair chance of finally this triangle breaking to the upside. This has been a pretty tight triangle, contracting triangle, where really the difference between the top and the bottom was only like 250 pips at the moment. So there's not much of a trending mode on the dollar yen, as you can see the last few months. This could definitely change once we break through 99.80 and 100. And we could look at 1 hour charts and keep buying the dips back to the band, because this thing might not retrace deeply if once it's in a trend. So that's what I'm waiting for on the dollar yen. Still needs to break though, because and hook back to the band. Doesn't make sense to go long right here, right in front of 99.80. Doesn't make sense to go short either, because if you look at the upside, I mean the trend is definitely up, but still needs to break. And yes, there is a chance we do not break. I mean, we're very close to breaking. It's literally could happen any moment if you look at this 1 minute chart. But if we don't, then this could still be actually a bouncing spot to go back to the bottom of the triangle. That's why it's important to be patient and wait. So that's my vision on the dollar yen. Let's take a look at what else. Euro pound, I don't like the currency anyhow. Kiwi made a very big spike up, in fact, after this pretty big wick, and moved up a lot of pips, in fact. But has a pretty big wick on the 4 hour chart. Massive doji, in fact, right at this trend line potentially. Wouldn't be interested in the Kiwi either. It's just a big old range here. and I don't know. It doesn't seem too appealing. It's kind of like the Aussie. Could also be in a bouncing spot maybe. Would rather wait for the potential hook back than right in here. It looks bearish though, this rejection. But the rejection has already moved down quite a while. We could easily see a bounce here or a bit lower. Alrighty. What else? Pound yen. Pound yen is actually, not sure if anyone was looking at it, but it did break, or is breaking in fact, pretty strongly above this trend line as well. Let me take this one off. This trend line that was connecting the tops. It too was quite tight consolidation for a couple of months. Especially for the pound yen, it's only like a few hundred pips. Well, for the pound yen, that's very, very little. But it seems to be breaking very bullishly, in fact. That too happened during the night, or my night at least. And is above 160. Already broke the 160 level. And it's looking like a very bullish break because we're even pushing above this resistance. One thing what we could do tomorrow, for example, if this indeed closes bullish like this daily candle, take a look at, for example, maybe retrace of this daily candle, maybe back down to retest or retrace half of it, and we should see some support kick in. Depends how this daily candle closes. If there's a massive wick at the end of the day, well then the analysis wouldn't be valid, of course, but if it closes bullish like this, with a close near the high, then we could, potential trade could be a dip, buy on dip, and retracement of this daily candle. Euro yen 2, we were talking about the bullishness. I think yesterday we were saying that this has the potential to retrace but then continue, and it is doing so. Small bull flag right in here, in fact. That's a good break. Let's see. But yeah, that's unfortunately now it's moved away quite a lot, as you can see. This is the 50-minute chart, and it's sailing above the band. Well, obviously, as you can see, once it's sailing above the band, if anything, it retraces first back to the band before it continues. So with that in mind, it wouldn't make sense to do anything here. But this was a good break, if anyone caught that yesterday evening. The yen is quite choppy. Let's take a look at the euro odd maybe. Your odd seems to be breaking actually as we speak. This broke just right at the beginning of our session. In fact, we're right, yeah, just before it slash, just when we started, unfortunately. That looks like a good break, though. Here too, though, I would wait for hook back to the band. All right, then we can take the next break of the 50-minute fractal. I think the euro auto makes sense. Let me take a look at the 4-hour chart. There's not much space, but still, it could make that a few pips up. Be careful of the top to at 145. That's definitely a resistance spot, so we don't have much space. In fact, 4-hour perspective, we can see that it's maybe not as lucrative, but still. Oh, I was doing some testing here, as you can see. Let me zoom out a bit. There, it's better. Well, if we break this 145.20, this could be still maybe get some upside. I mean, we did go back to the long-term moving averages. As you can see here, we haven't been back to those for very long. We stayed above the black band, only hooked back a few times, then eventually got double top and broke below the black band, using it as a resistance, and moved all the way back to the green band. But the green band was a bouncing spot, as we can see. So there could be a potential to, if we do break, to get some follow-through. Let's see if we do break above that resistance or not. In the meantime, we still have a trade maybe to resistance, but I would only trade it if we get a hook back to the band and then a bounce and break above the next fractal with the stop loss. You can put right below the 50-minute fractal for a pretty tight stop loss and trail stop it with the 50-minute fractals. That could be a decent trade, and maybe aim for 145. All right, so that's what I would be waiting for. That looks good. What else? Here in New Zealand is a bit funky, but it too is breaking to the upside. Yeah, we can take a look at the dollar Swissy. Dollar Swissy, let's do that right now. Dollar Swissy didn't get the follow through to the upside, just like the euro dollar. In fact, made a correction one more time to the downside, and had a bit of a funky moves in this bear flag. This bear flag right in here. It looked a bit funky because we had a down, up, down. That was quite spiky relatively for the dollar Swissy. But it did look like a bear flag after an impulse down. So, you know, in a way, from that point of view, you know, it's not a big surprise that it moved down. Although I also was thinking that this could be a bouncing spot because we were at the long-term moving averages. That didn't happen though. Let's see. If it doesn't quickly move up, then this is slowly but surely definitely turning into a downtrend. In fact, still be patient. If it does break above this, I would definitely be glad to buy it and take that trade, take the breakout, sorry. But not sure if it's going to get there. At the moment, it's showing a lot of weakness and making low lows, low highs, and it could keep doing that, in fact. So we did bounce off the 618 and 786. I think there's still a fair chance we'll get there. Probably shouldn't break this bottom here at 91. If we do that, then you know the bullishness is probably out of the window. Until then, anything above there, this could easily be a bouncing spot either here or even lower to continue up. But the dollar is pretty choppy. Yes, we had some strength, but especially against the euro, even against the Swissy, against the odd. But there's, you know, a lot of currencies are quite choppy. Look at the Kiwi. Look at all those yens. They're right in triangles. Even the pound. The only thing that's really moved more smoothly is the euro downside, and the odd has moved nicely. Other than that, it's been quite choppy the last 2 months, I would say. Dollar CAD too. Anyhow, that's what I'll be waiting for at the moment. I wouldn't be looking for downside yet. It could definitely be downside, but somehow it's maybe my long-term vision of the upside break is biasing me to be careful here and not look for more downside. Although it definitely could happen because obviously we're making lower lows, lower highs. But still, probably for me to be able to trade that downside, I would really need to break this support. Dollar CAD. Well, the upside is really struggling. In fact, the day chart, we can see, couldn't break this resistance line. It's very, very choppy, and wouldn't be really that excited about trading this. Just looking at this 4-hour chart, it's inching forward recently, but not much. It's only 100 pips here difference. So, you know, the other currencies moved 100 pips, let's say, within a day, or maybe a few hours in some cases, but this really takes almost a week to move the same amount. So, very slow mover. There's divergence between these tops. If anything, it's looking like a turnaround here. It's a pretty aggressive move down. Then again, we've had that move down here too, and it only got a bit of a follow through, as you can see, right in here, before it did move up. That too could happen here. Yeah, difficult. For me, I don't like either side at the moment. It would really need to make a bit of a spike up, and then we can start looking for buys. Something similar to, I think we were saying it would be a good buy if we hook back here or somewhere. I thought we said, I'm not sure anymore. I don't remember exactly. Or was it here? No, I don't think so. I hope not. I thought it was somewhere earlier, but I'm not 100% sure anymore. We were saying, or I was saying, it would be a good buy on the dip. I thought it was here. Didn't go that far. Well, something similar, if we break and hook back, could be valid. Otherwise, the bearishness would only be traded for me if it does move down and make a bear flag like that. Still could be support, right? Alrighty. Let's take a look at gold. Gold got a bit of a bounce up from that level, and it's used the support as a bouncing board. Let's see if we can get any follow through. It is right at that 1287 resistance. We could put a trend line maybe here. Not too interested in at the moment. Let's take a look at this. Here too we got a spike up. But if you look at this 4-hour chart, you can definitely see a downtrend. Same for gold, so we have to be careful with that. Let's see. What about maybe the pound odd is showing something interesting? Pound odd continues up again. And has moved up a lot, in fact. Let's see. This band had an upside angle since this candle, If you want to see something, yeah, you can see when the band has an angle to it. All right, so one more time, just looking at the angle of the band. Here it was flat, and with the green line, that's where it turned. Right here was a good angle. When you have a good angle like that, just as a tip, you know, you go to the 15 and a break of the 15 trend line or fractal like that often leads to a decent break. Now, of course, sometimes you have some whipsaws, but in the long run, there's definitely some equity there. So that could be a good method of using that band on the 1 hour chart and the angle of it. Not a bad idea. And well, the stop loss is tight using the 15, and it surely is a very good breakout on the pound odd earlier today. Yep. That's behind us, though, unfortunately, and we'll have to wait for a new round, basically, for it to hook back, because, as you can imagine, jumping in here doesn't make sense. And usually our parachute is definitely not good enough to handle that jump, because it's moving as we speak. I mean, that the only thing that could be traded maybe is a 1 minute scalp. As we can see, even if we look at the 1 minute chart, if we take all these fractal breaks, it's not that bad, in fact, as you can see. Interesting enough. Not that I have a trading method for trading the 1 minute, but this is just more out of curiosity as an observation. You can see if it really is trending a lot, that this thing just keeps moving and keeps making 1 minute fractal breaks, and even sometimes just keeps pushing without those fractals. Look at this part. Wow, a 30 pip rise in just minutes. Quite impressive. 10 minutes. So when it really gets impulsive, we can see there's not much retracement, but that's always a bit of a risk, because we don't know when that impulse necessarily will start. This was also prior to London Open, in fact. But even on the 1 minute chart, you can see it's just overextended, right? Very far from the band. Hasn't been back to the band since here. You know, the likelihood of this going back to at least the 1 minute band, well, it's too high just to jump in here. And where would you put the stop loss? It doesn't make sense. At least I don't have a plan to trade it. Let me say it that way. We can take a look at the odd cat. So that's not an option here. The euro odd probably hook back is the best. It's the only thing I see today, really. I'm waiting for the dollar yen to break, which it's finally doing. So a break and a hook back to the band, and we can take a look at longs. That's the only thing that really piques my interest. Let's take a look at odd cat. We've got a great comment here from Björn. Let's take a look. Odd cat, where is it? Here it is. Okay, Björn is saying odd cat daily. So let's take a look at the daily. Made 5 waves up, and ABC now, and is asking, if so, 161.8 fib extension a good buy target. Let's see. Yeah, sure thing, Björn, of course. Great comment. Great observation as well. So I thank you for that, in fact. Um, it definitely looks like 5 waves, but let me take a look at the 4-hour chart. What I'm looking for is a confirmation of that 5-wave structure. Let's see. This is definitely an extended move up. This could definitely be a 5-wave here. This could be an ABC. What do we have here? This could be a 5-wave like this, completing a 5-wave. This could be a wave 4, and this is a very big wave 5. The only thing we need to check is the length here. Let me take a look. This is 362 pips. This is 412. That's good. Wave 3 can never be the shortest. So it definitely could be, indeed, as you said, this could be wave 1, 2, 3, 4, and wave 5. But let's see if the fib ratios match up. So here we got a 50%. That makes sense. We stopped at the minus 272, and we stopped at the minus 680. So, those levels are being respected. That makes sense. Let's take a look at the next one. .382 fib, which makes also a lot of sense. Wave 4 is usually shallow, which this one definitely is. 38.2 is considered shallow. And we go to the 272 target, stop there, and then move on to the minus 618. So yes, very classical. The fibs nicely confirm the wave count and wave analysis, and everything is very harmonic here with a good internal wave structures, good corrections. You can see that basically from the moving average point of view, because the focus is the moving averages, I want to share with you that you can see once we closed above the band here, that was the signal for the bigger retrace back to the long-term moving averages, right? You see that? Take a look. And that's where we struggled a lot, but once we broke again above these moving averages, you can see the band was then nicely aligned above the bands were nicely aligned. Price was above the bands in most of the cases, and we got nice continuations with the bigger hook back to the green band here, and then this black band just provided an excellent support. And where did we get the retracement? When we closed here below the band with a big impulse, we got the bigger retracement, right? Classical. Then below the green band, we went, where did we go to? Back, black band. Once we closed below the black band, where did we go to? Down to the green band, which was then support. Then the black band became resistance for that downside again. So this is how you can use those bands as well. So very nice harmony in that in this piece of price action. Good trends. On the daily chart, let's take a look at that. Of course, we can see that this upside might be, of course, a correction of this downside. This was even a bigger trend down, and also had a very nice, nice trending mode, as we can see. And the daily band was nicely used as a resistance until we broke above it here, where we got the bigger correction. One thing I want to check is the oscillator as well. For example, we can see that, let's take a look at the oscillator, because what I want to check is if this alleged third move, wait, where is it? I'm a bit lost now. Let's see, where is it? Good. Yes. What we want to check is if this third move is the highest in the oscillator. Which it is, but it's just barely. I have to admit that this upside is a bit shorter than the usual wave 3, although I did get some follow through. So there's a fair chance that this is a 5 wave, but we have to realize that it could also be maybe an ABC. I mean, the thing that I don't like about this part is the oscillator is not really that convincing. It is just about the same as wave 1, which is a question mark, therefore. This wave 3 should normally be the strongest. There shouldn't be any doubts about it. So that's the only thing that really gets some hesitation from my side. Because of that, there's also a likelihood of this maybe being a double zigzag. That double zigzag also would fit better within, or would fit definitely according to this downside, where we would have a correction like that, maybe. If you look at the band, we also closed below the band here, which is acting as a support and resistance. Now this is the weekly, and we can see clearly that 95.54 is a key bottom. That's a weekly support. If you look at the oscillator on this weekly chart, we can see that this was a very strong down move, and we've retraced back to the zero line here. So what this could be is this downside, we could maybe see a bounce off 95.54 and then maybe move down. Who knows? Or if not, then maybe see something like that and then see a bounce in here again. That's possible too. So on these higher time frames, it looks quite bearish to me. Of course, it could definitely be true that this minus 618 we see a bounce. Personally, I wouldn't have entry order there, but it could make sense to see if we get some pin bar off of this minus 618, and then it could make sense to go long. But looking at the higher time frames, I'm not sure exactly what our expectations could be with regard to the upside. You know, I think that if you look at this daily chart, you know, is this downside indeed a retracement for more upside? That's the question. So we could put a fib on this upside as well. Let's see, 382 and a 50 close by, 382 very close by in fact, 97.60, and the 50 a bit lower. Well, with the 382, this definitely seems like a bouncing spot. The question is how much will it bounce? I don't think much. Maybe up to here, up to the green band, and then we could see one more downside to the 50 fib, and then again upside. Something like that would seem the most logical when looking at it from this perspective. You know, it's definitely not easy in some cases because you got, you know, multiple time frames indicating different information in a way. I mean, if you look at the 4-hour, the upside looks very strong, but if you look at the daily, weekly, you can see the upside could easily be retracement for more downside, and then, you know, it could become indeed tricky, indeed. So something like that, I would say, is the most likely. First a bit down, to support, up, but not much probably, I think. It could be the band could be resistance, and then down and then up again. But we'll have to see, of course, logically, depends how this price moves when it hits this level. Does it fly up like that and then make a bull flag like this? Well, you know, the likelihood of then continuing is decent. If that upside is not that visible and it does this and then this and this and then this and this, well then this is probably going to be a resistance and we'll probably see that fall. So it does, of course, that analysis and information or projection changes as price action is moving along. But I like the idea of a bounce in this area. I think we should stick to the things we can predict within a certain close period of time. And that looks like indeed definitely a potential bouncing area. But the thing is, with the lower time frames, they could push down lower than we might think. That's why an entry order, I think, is risky, unless you really use this as a stop loss, which might be a bit big. That's why waiting for a confirmation is better, because the short-term time frames could overextend and push lower than we think. And it could bounce 20 pips below this target. That's why. Yeah, this too. It could even be a good short to that level. In fact, if I mean from a smaller time frame, we still have some pips down to 97. If this were to hook back, in fact, and then the next fair fractal break could see continuation down to that 97. So if that could be one way. Taking this short, then it's easier as well to take a long in here, a position long, because you can hedge that. I mean, I'm not saying that hedging, be careful with hedging, but in this case you're hedging profit. So in that case you could move this short to +1, take a long where you want to take a long, and you've hedged this profit. If it continues down, you'll still be making more on the sell and losing on the buy. It doesn't matter. It's still the same profit. Then whenever it decides to bounce to the upside, if it does extend further than we think, it doesn't matter, because it can go as far as it wants. If it goes too far, you don't like the setup, you can just close both trades and you have the profit. If this, however, does bounce here somewhere and starts to move up, then you have this as +1. You get taken out for +1, and you put the buy also at +1, and you can't lose on both. That's one one technique in attempting to maybe trade a certain key level or big level or potential bouncing spot on a higher time frame. And the disadvantage of that is that you just get more extensions and pushes through that level than we expect, because the 4-hour world could easily see a push of 20, 30, 40 pips through a level, and it could still be respecting that level if it bounces there lower, but our stop loss could be taken out in the meantime. But if you take a shorter term trade to that level, you could avoid that problem. So I hope that makes sense. Other than that, just as a general warning, you have to be very careful with that idea. And personally, I would only advise really to do it with profit and a sizable, decent amount of profit before attempting this. Right? You don't want to hedge 5 pips, for example. And hedging a loss is seriously very, very dangerous. I mean, you need to be very experienced with that, because otherwise that hedge loss can, most of the time, it just grows into a bigger loss. Alrighty. Ah, yeah, I can do that, Yano. Sure, definitely. Let me put that on my list of things to do. Let me add those numbers indeed. Alrighty. Yeah, there's a potential good down move there, but I wouldn't do it here because we just extended away from the band. So this could still fall a few pips, but there is that likelihood to trace back to the band. That's what I would use as an opportunity, and then the next break of the break of the next fractal, I should say, could see that continuation. I might be wrong. It could make that downside in one shot here, but I wouldn't be willing to risk that personally. I would say it this way. I would rather wait for that hook back. So what has happened in the meantime? The pound dollar still not able to break this 50-minute resistance. How about the euro? Euro got a bit of a push up. Nothing much. How about the Aussie? Wow, the Aussie continued to fall, in fact. It's getting close to the support line. We were looking at it around here, weren't we? I was hesitating, as you know. But still, the R2R didn't really match up. I really thought it made sense to wait for a back, but I did have some doubts. I thought the downside, the bearishness looked pretty good. Anyhow, it doesn't matter. It still could get a bounce here and a hook back for more downside, probably. Alrighty. Anything particular? Thank you, Björn, by the way, for that contribution. Great stuff. Great analysis, and interesting to take a look at that. Does anyone else have a suggestion they want to look at? I think we've looked at all of the majors we look at, usually and regularly, but maybe there's some particular pair you want to take a look at. USD? Mm-hmm. Sure. Anything in particular, Rich, that you're looking at? Any particular time frame, maybe, or a particular type of analysis? Yes. Yeah. So you're also looking at the same. Yeah, we were thinking the same indeed. That there's a potential to bounce off this green support line indeed. What we can do is, if we do get the bounce, we can put a fib like that, and maybe the 50 or 618 could be the bouncing spots. Yes, 618. Yeah, definitely. Definitely. Could be a good bounce and for the break. So one trade could be at the 618, or indeed a candlestick pattern rejection off of the 618, or a move up and then the next fractal break after the 618, or the break of this trend line. Those are all potential entry methods indeed, or an entry right at the 618. Also, if you look at this chart, we can see here a move down 382. We're pretty close to the minus 618 target. So that itself should be a bouncing spot. And we probably go back to this level right in here for the downside indeed. It's what I would think at the moment. Definitely. And once we break 92.80, then this thing could really keep dropping a lot. This could start to become a good downtrend, and keep an eye on that 1 hour band, because we might not get many breaks above it. It could really stay under that band like it did here, but for an extended time, and maybe all the way to 90 or 88, etc. And that could be a good trend. That could be good breakout trading. So we need that confirmation first, but it is looking like it's setting up for that. Especially if you look at this impulse, it's pretty good impulse. Yeah, but that's why I was hesitant though with selling it here, because I don't like to sell it halfway, potential support and resistance. Because all you get is a small downside, and then you see this go against you. You might as well wait for that and sell it here 1 or 2 days later at a better price, I think, than jumping in here. Of course, there's a chance that it could break, but I'd rather wait for the break than unless you sold it maybe a bit higher here or here, closer to the top. But here, so close to the support, I did have doubts, but I still think it doesn't make sense. And better wait, as Rich also says, for the last fib, the newest fib, sorry. You can see the downside is pretty prevalent or strong. We only had a couple of up days in this whole downside. All the other days were bearish, in fact. Regarding moving averages, another way of doing that is looking at, for example, a very short-term moving average. You don't use it that much, but you can look at, for example, a 13 or 8 or 10 or 9 to indicate the short-term potential. And you can see if you look at this pink line here, let me make that a bit thicker. I'll make it orange. This had a very good angle to it when this was in its trend, right? Look at that, very steep angle. There are just some retraces here, small one here, but otherwise it was definitely pointed to the downside, and here. And of course here we got the bigger retrace. But this short-term moving average has been already pointed down ever since this day here. And our black band followed suit more or less somewhere in this consolidation, or the break of it maybe even. The other way of doing it is, another moving average is, for example, a 3-period, 3-shift typical. Also an interesting way of looking at price versus moving averages. Well, let's see if we get the bounce. This Aussie is dropping like a stone, but it's very close to that support. Just a few pips. Pound is also falling. Euro 2. Dollar Swissy is moving up. Dollar CAD is moving up. So we got bit dollar strength, and dollar yen is right at the 100 level. So let's see if we can push through the 100. That would be great. If we could push through the 100 and then get a hook back, I would gladly buy it, at least up to 1060. That's finally what I've been waiting for, in fact, for this daily triangle to break to the upside. Well, folks, I guess we'll have to wait for that. Other than that, I don't see anything else to discuss. You can still, I'll still give a few minutes, maybe if you have a question or if you have a particular currency, like I asked last time. But otherwise, I guess we'll wrap it up because I don't really see anything to trade except for myself, except really a euro odd hook back or dollar yen hook back at the moment, or a euro dollar break to the downside, or maybe a pound dollar break to the upside, the odd USD hook back, dollar Swiss breakout to the upside. I'm basically waiting for those things to happen. Some of it might not happen, but that's what I'm basically waiting for. That's my game plan. So it's not happening, nor will it probably happen in the next 15 minutes. So unless you have some specific question about moving averages or whatever, let me know, or a particular currency pair. Otherwise, we'll close it for today. And tonight we in fact have a webinar on trading plans, in fact. So check it out if you want. How to plan your trades with Nanette, also known as Tarantula, at 5 p.m. GMT. Then we'll be back next week with intraday trading, special recap with Tarantula, trend line training, I think it should be, and wave and fib trading next week, Thursday. So for those of you who like fibs and don't mind listening to wave analysis, then that's next week, Thursday. No comments so far. So I guess everyone's good to go. In that case, I'm going to wish everyone great trading today, and I hope to see you tomorrow. I hope to see you tonight, in fact, this time around. And if I don't speak to you, great weekend already. But looking forward to tonight's webinar. I think it will be definitely useful because, let's face it, everything boils down to our plan. It's really the execution of our trading plan that should be key, and how we execute our trading plan. How successfully we do that leads to the profit. If we focus on profit, then that would negatively influence our performance, I think, because you're basically trying to make the best decision every single time, and it's going to be very stressful, and you're going to be blaming yourself for decisions that are just taken maybe not consistently enough, while our focus should be really focused on the correct implementation of our trading plan, and having a good, awesome trading plan, first of all, of course, and then the second step is implementing that consistently and as accurately as we can, day in, day out. So we'll talk about that, for example, and how to plan your trades, and more on that topic tonight. So in that case, I wish everyone a good day as well, and talk to you soon. Cheers.
The organizer